Hello traders and welcome back to my YouTube channel IPDATrader. Now in today's video we are going to be talking a little bit about the difference between a break-in market structure and a liquidity grab. Okay, this video is actually inspired by a question I received from a student in the mentorship. He was wondering, hey man, how do you really determine what is a break-in market structure and what is a liquidity grab? And we're going to be discussing a little bit of that idea today, okay? Because there are certain things that you can read within the charts that will give you clues in terms of, is this a break-in market structure or is this likely to be a liquidity grab? And once again, we're never 100% sure, but there are things that you want to be paying attention to in order to understand if this is likely to be a liquidity grab or a break-in market structure. Okay, many people are confused with that idea, so this is what we're going to be discussing today essentially. Okay, so with all that being said, guys, if this sounds like something you want to learn today, the difference between a break-in market structure and a liquidity grab, make sure you stick to the entire video, because once again we're going to be discussing that idea. So with all that being said, guys, let's actually get started over here. So traders, we're on the drawing board, as I usually like to do on this channel, and we're going to get started with today's topic of discussion, which once again, we're discussing the difference between a break-in market structure and a liquidity grab. And I'm going to be giving you some ideas that I'm hoping will probably help you out in determining whether that is a break or a liquidity grab. So the first thing that you really want to understand when trying to work with this concept over here is you want to assess the nature of the candles, right? This will give you information, and we're going to be getting into this in just a second. Nature of the candles, context, and where are we breaking. These are the ideas that will help you with drawing the line between a liquidity grab and a break-in market structure. So let's actually get started discussing this. Okay, we're going to be simply drawing an example over here. Let's say we have a market like this, right? Some sort of this. Okay, so let's say we're working with this break over here. Okay, this is your most recent break. This would be considered your expansion of the range higher, right? This becomes your new structure point over here as we trade above that. And now you're wondering, hey, is this going to be a true break-in market structure? Meaning, can I expect that as price returns into this area, we're going to be simply tapping that and moving higher, or we're going to be completely reversing once again, because this is a liquidity grab? This is the question that I get all the time. And the first thing that you want to understand is the context, okay? And in order to have a context, you need to understand your high time frame narrative, and essentially that, right? Understanding your high time frame narrative will always give you more information. Now, when we talk about where are we breaking, this is important, guys. If this break over here occurs and what is being taken over here, let's say as an example, let me grab my tool, is a Asia high that is being taken out as we trade above that, then you can expect and you can anticipate it being a liquidity grab, because once again we are reaching above liquidity. Okay, if this previous structure point is an Asian high, then as we trade above that and we start moving lower, I would be extremely careful in terms of anticipating this to actually hold and be a structure point. Now, same idea applies if you have some sort of resistance, right? Let's say the price action, let's remove some of the stuff over here. Let's say you actually had some sort of resistance on top over here, okay? So you have a resistance, right? Triple top, whatever you want to call it, right over here. And once again, you're reaching above that, right? And you're wondering, is this going to be a liquidity grab or is it going to be a break in market structure? Once again, if we're reaching above liquidity, let's say you have a resistance plus an Asian high over here, right? Then I would be extremely careful once again, because we're reaching above liquidity And if we are sharply reversing, and I'm going to be giving you the keys in a second, right? But do want to be first understanding this. If this is going to be a liquidity grab, we're indeed reaching above liquidity, right? We have triple top, we have Asian high. We're now probably going to be reversing and going in the other direction because once again, liquidity has been grabbed over here, okay? So when we talk about the nature of the candles, guys, and this is really the key and what will filter those good and bad breaks. And let's actually draw a brand new example. Let's say this time we have a bearish market, right? Something of this sort where we do something like this, right? And then we are over here. And now you're wondering, right? You're looking at this POI, you're wondering, well, should I take the sell over here? We did had a break. Once again, it is below lows, but this looks pretty impulsive, right? So what you want to understand in terms of nature of the candles is if you are seeing this as an impulse, right? Meaning strong bearish delivery over here, and then you get weak bullish price action that takes a lot of time to actually move up, right? Something of this sort, then yes, you are absolutely can expect that this is a true break. And as we trade into this point of interest back over here, right, this one, then we're probably going to be continuing lower because once again, you need to be reading the candles. If you see strong bearish delivery, weak bullish delivery, right? As we trade below that and create that break in market structure, then yes, you can expect that to be a absolutely valid break, and then we can continue down with the sells, right? On the other hand, and let me actually give you the scenario number 2 over here, right? Let's say this time instead of having strong bearish delivery coming down, right, as the range is expanding. Whoops, I removed that one. I want to keep that one just a second, something like this. Let's say this time you have the opposite thing occurring, right? You have weak bearish delivery, meaning it's taking its time, it's slowly coming down, but it's having consolidation phases, right? It's not very impulsive, it's not very strong. And then on the other hand, the retracement, right? The potential retracement is actually pretty strong bullish delivery, something of this sort. Then you want to be extremely cautious over here, okay? Because once again, you have to assess the nature of the candles. If this looks like a weak bearish delivery and strong bullish retracement, then this is likely to be a liquidity grab and you want to be avoiding that. Once again, let me repeat it. You have weak bearish delivery coming down and you have strong bullish price action coming up. So at this point in time, you can say to yourself, hey, I don't like the price action. This is not showing me any signs that we're going to be continuing lower. I might just, you can either wait for more information or you can simply avoid it because this is extremely risky, okay? You are trying to take sales over here when the expansion of the range, which is this bearish leg coming down, is showing weak delivery and the potential retracement, right, that you can expect is showing strong bullish delivery. So these are the key ideas, once again, that you want to understand, right? Let's do a brief summary of all of them. Nature of the candles, I've just explained that. You want to understand how the price action is being delivered in terms of impulsive expansions, retracements, all of that will always give you more information, right? Let's do understand the candles. Number 2, your context. And sadly, I cannot go very in depth over here, but it's understanding your higher time frame narrative and the bigger picture. Okay, higher time frame narrative, bigger picture. Right? Looking at your 4 hour, at the 1 hour, does that make sense? Do we have enough range? Are we really pushing in that direction? Those are things you want to be asking yourself, okay? Are we approaching any liquidity pool? Are we trading into any POI? All of that, right? Those are things you want to understand in terms of your context, and those are things that will help you filtering those liquidity grabs and trading those true breaks in market structure. And number 3, once again, this is also pretty crucial. Where are we breaking? Meaning, are we reaching above Asian high liquidity? Are we reaching into a potential support where sell stops are going to be stacked all across there? So Those are things you want to be paying attention. Once again, let me draw an example over here. Let's say this is your break over here, right? Let's say we create some consolidation, right? We move down, we move up, and you're wondering, is this break going to be holding, right? I may want to be getting involved over here, right? Then you want to understand the nature of the candles, you want to understand your context, and you want to understand where are we breaking. If we are breaking above, let's say you have Asian highs over here, Asia high liquidity plus retail resistance, right? Retail resistance or even trendline liquidity, then be extremely cautious because we're most probably just reaching above this structure point over here to grab liquidity, because what do we know? Above this area, there's going to be plenty of liquidity to be grabbed. So understand that very well, right? I really do hope this video this little bit of explanation provided you some help in terms of understanding break-in market structure and liquidity graphs. Those are the three rules you want to be following and sort of asking yourself in terms of filtering those good breaks and avoiding those liquidity grabs. Okay, I think this should make sense to you guys. And what we're going to be doing now is simply going back to the charts and looking at a very simple example, because once again, I'm not trying to make this video too long. We're in December, I've got plenty things to do, so I'm going to be keeping this rather short. Now, with all that being said, guys, let's actually jump right back into the charts and let's continue discussing those ideas over there. So traders, we're back on the charts, and once again, this is going to be very briefly. We're going to be discussing a little bit of that, okay? So if we're looking at this chart, and this is USD CHF, not something that I trade, but I figured we could use this one since the concepts that I teach over here apply to every single market. So we look at this structure, you say to yourself, hey, this is my break over here, right? Right above that, you can see we barely reach above it with a wick, but you can see the impulse coming up over here, right? You can see strong bullish delivery and weak bearish price action coming down. Hence, we come back down, we hit a specific block over here, right, in between these candles, and we move all the way up, right? Once again, this would be considered a valid BOS. If you see a leg like this where you have strong bullish delivery, breaking above that structure point, not reaching above any Asian high or any double top, triple top liquidity, then yes, you can expect this is a valid break in market structure, right? And you can say to yourself, hey, I'm going to be waiting for this area over here, right? Sometimes it may get top, other times it won't, but at the end of the day, you are following structure and you're making sure your breaks make sense, right? And I'm not taking into consideration high time frame narrative because we're just simply doing the example of understanding the nature of the candles, right? And if we're reaching above a liquidity pool or not. This would be an example of a valid break, right? You have an impulse coming up, you have a break above structure point, you have weaker bearish delivery, and this is key. And then we sort of probably move away, right? Didn't really tap into the origin, that's fine, that will happen. And then we sort of move sideways and eventually break once again, making a new high. Now we look at the nature of a break like this, right, where you have a very exaggerated wick and extremely heavy rejection, right? Would you be considering now this block over here, right? I wouldn't personally. Once again, due to the way that we broke over here, okay? We probably reached above some liquidity. Fortunately, the indicator that I use will not show me every liquidity pool in the past, but this is very likely to have reached into some sort of liquidity pool, right? Just by looking at the candles, we can read that. And we push up, we tap into a liquidity pool most likely, and then we get strong bearish delivery, right? That's another clue. If you compare the bullish expansion over here, right? And let me actually draw that out a little bit better. You compare the bullish price action coming up to the strong bearish delivery as we're coming down, you should be well aware that, hey, this might actually not be a true break. This might actually be a tap into a liquidity pool, provide smart money bearer entries, and then we might continue up, right? Because even if this is correct that we're reaching above a liquidity pool, but look at the bullish delivery, right? You can see how it takes time, how we're consolidating, right? We're stacking Asia lows as well below this area. Same thing over here. So we reach below that. We move up. We save the Asian high. We move all the way down. We're now having strong bearish delivery. So why would you even bother expecting this area to hold, especially when you still have this area to be tapped, right? If you can refine that to this candle, we probably gotta tap into that. So what I'm trying to say is that you need to understand where are we breaking once again, where are we breaking above or below, breaking above or below, candlestick nature, right? Are we breaking impulsively, rather a little bit of a retracement, whatever it may be, right? And the third thing, what was it? Completely forgot. Where are we breaking above, below, the nature of the candlesticks, and just give me a second over here. I might have to review some stuff. Just a second. All right. Obviously, the high time frame narrative right over here, right? I completely forgot about this one, but this is also extremely important. And once again, this is all to do with your context, which you get by looking at multiple time frames and trying to create a story around what's happening with price, right? You flick through your 8 hour, you flick through your 1 hour, whatever time frames you want to use, and you try to make sense of what's happening. So guys, that's going to be it for this video. I really do hope this provided you some insight and information. And yeah, that's going to be it. I appreciate every single one of you actually tuning in. Please leave video suggestions if you actually want to see something in particular. I always look at the comments, so I might actually see it and do it if I like what's being said over there. So leave a like, comment, subscribe, share that with your friends if you actually enjoyed it. And I wish you all good and profitable trading, and I will see you guys very soon.